Hello guys, welcome back to this video. Have you ever seen those Nigerian or South African traders who flip accounts? They turn maybe $100 to 1,000 in a day, or they turn $10 to a million in a week or a month, and you want to be like them or one of them. This is most likely the easiest model or strategy you can use to trade, or you can use to flip accounts using gold. We are using gold because gold has a very big value per pip. Like the amount of money you make per pip is very good. So you can easily use gold to trade and flip accounts. Now, in this model, we are going to use the daily candle. We are only trading the daily candle, one daily candle. In our case, we are going to use the Monday candle. Therefore, you have to wake up and mark the new week open. This is the new week open, or the new day open for Monday. The new week open also serves as the new day open for Monday. So we are going to trade this Monday candle. But before you go there, let me explain the logic behind account flipping, or flipping accounts, or the mechanics behind flipping accounts. Let's say you have $1,000 and you want to flip this account of $1,000. What traders do, or those flippers do, they split this $1,000 into several $100 portions. So this becomes 10 portions of $100. Okay. Now, if you deposit $1,000 into your broker account, you are only transferring $100 to your trading account only. And you are going to trade this $100 and try and flip it to maybe more than $1,000. And that means you're going to get the best possible entry to trade and flip this account to another $1,000. And that model is what I am going to show you. If you manage to flip this at $100, if you manage to flip this $100 to $1,000, you will move $900 back to your broker account, making it 1,900. As a result, you will be remaining with another $100 to try and flip to another $1,000. You are going to again to get another model, another setup that will turn your $100 to $1,000, which means you will trade again, make the $1,000, withdraw $900 to your broker account to make it $2,800. And just like that, you'll be growing this account. Now, how do you easily turn 100 to 1,000? You will not trade with a single large lot size. You are supposed to trade with several tiny lot sizes, mini lot sizes 0.01, and that is because the advantage this lot size gives you is you are able to utilize the full margin of your account. You are able to utilize the full margin of your account, and this will work well for leverages where it is 1 to 100 and above. Some brokers will give you from up to 1 to 500. Now, why do you want to use 0.001, or the smallest lot size you can use on this account? You can open several positions, maybe up to 10 or even 20 positions of 0.01 lot size. And if this trade moves against you, maybe retraces a bit against you, the broker you use will close these 0.01 lot sizes one by one, not all of them. The disadvantage of using a single lot size is if you hit a margin call, the broker will close that single lot size, the whole of it, and you'll not be trading anymore. But using the 0.01, several of them, maybe 20 of them, if the trade is retracing against you, once you start hitting margin calls, the broker will close this 0.01 lot sizes 1 by 1 or 2 by 2 or 3 by 3 until you maybe below the $100 account. Now the advantage here is, in case it was just a short retracement, the trade will again come back with the few remaining 0.01 lot sizes and go in your direction. However, you want to be monitoring the trade so that you again add positions if the trade starts going in your direction. Now, we have talked about the mechanics behind trading or flipping. Let us now go to the strategy you need to use, the model you need to use to flip accounts up to 1,000, from 100 to 1,000. This is like 1 to 10 risk to reward ratio, but sometimes you'll get even 1 to 30, 1 to 50 risk to reward ratio with this model. Let's get into it. Going to the charts, I have said we will use this Monday open, new week open, or Monday candle as it starts forming. Now the logic behind this is a candle will always open, form a low, and then go high to form a high of the candle and close. And this is what happened on Monday. The Monday lows was here and the highs were here. It opened here, it closed here, and opened here. This is always the same case for all the candles. Tuesday, same thing happens. It opens here, forms a low, and then goes up to form a high and close. On Wednesday, this candle formed opened here, formed a high, dropped to form a low, and closed. That is the basic concept. Open low, high close, and open high, low close. Very basic, nothing complicated about it. Now, once you have your new day open and price is moving, you want to observe the price in 5-minute time frame. In the 5-minute time frame, you want to go to the exact spot where the new week opened, and it will be right around on this candle. Yes, exactly on that candle. Now, new week opens with Sunday, this is Friday, not this Sunday, Sunday at 10 p.m. That is when the new week opens. Now, immediately the new week opens, we have an impulsive move to the downside. Why do we have an impulsive move to the downside? Because we are assuming this impulsive move is forming the low of Monday, right? We have, in the high time frame, we have said a candle will open, form a low, and then go high, form a high, and close. So the assumption is, as this impulsive move is going down, we are forming the low of this Monday, and then we will go high. Okay? Now, as this is happening, we want to take note of a few things, and these things are contained in the ICT 2022 model. A very simple model to trade, nothing complicated. It's basically an entry model for this trading strategy. What you want to take note of is, as you are forming the impulsive move to the upside, to the downside, do we have a liquidity sweep? Yes, we do have a liquidity sweep right here. Okay, so this high is taken. Now we had a downtrend forming right here, right, and then there. So the moment we had this downtrend going, we had this forming a high and then a low, and at the retracement we formed a high that was above this previous high. Okay, with this happening, this is our market structure shift. Change the color. This is our market structure shift. Nothing complicated. And this is our sell side liquidity sweep. Now, with that happening, we want to take note of a few things. The first condition has been met, liquidity sweep. The second condition has been met, market structure shift, and now price is showing the willingness to go higher. However, still sticking to the 2022 model, ICT 2022 model, we want price to retrace back into an area of value within this area. Right? We want price to retrace back into this box, and we want to look for a reason why price would want to retrace back. The commonest reason price retraces back into an area is if we have fair value gaps, inverted fair value gaps, and breaker blocks. Breaker blocks are one of the best reasons why price would want to come back into an area. Now, where are these areas? We have this last up close candle before this massive movement to the downside. So this becomes, give it a different shade, this becomes a breaker block once price breaks above it. So this breaker block becomes valid. Now you will notice this breaker block is in the same area as this fair value gap. Give it a different color. Right? Now, in the ICT trading model, when a fair value gap is in the same area with the breaker block, it becomes a unicorn. It becomes a unicorn because it is a very high value zone for entries. Now, normal traders or normal ICT traders will do this. They will take an entry at the retest of this fair value gap or breaker block, and this is what they do. They take this entry, stop loss below this swing high, this swing low right here, and take profit maybe a 1 to 2, 1 to 3, right? Which is not bad. Conservative trading, very good risk management. You have enough room for price to play out. However, if you want to get into the account flipping business, this is what you are going to do. We are adding an extra layer of confirmation that price is willing to move in a direction. See what happens here. We have this fair value gap, and then we have a bullish engulfing candle of this fair value gap. So what are we looking for? This candle will give us a dealing range from here all the way to here. Now, this dealing range, this candle closes to the upside, and then a bearish candle to this, the discount zone of this dealing range, right? So dealing range, discount zone, we want price to come into this dealing range. Now immediately price taps into this dealing range, you will be placing your mini lot sizes, as many of them as your account can hold. Okay. Reason is we do not expect this price to go lower than this area or this zone, which is not bad. Even if you give yourself some room, you will give yourself some room, maybe up to oops, this is large, up to this area, around this area, right? But immediately this bearish candle gets into this box, we want to enter as many lot sizes as possible as your account can hold. Okay, at this point you are good to go. Let us look at the risk to reward ratio of this trade. Now ICT traders will typically use market structure to make their TPs or take profits. So your first TP is here, 6.99, which is not bad. Your second take profit is here because of this highs, 9.77, not bad. And look at this highs here. You want your next take profit to be at that point, right? And what is that? 25.5 risk to reward ratio. Now, I said we are trading the Monday candle or the daily candle. At this point, the candle has not yet closed. It is barely in the midday, which is a quarter of that day. We want to hold this trade a bit longer, like this. And which other area can we target? We don't know. Maybe we can use now time to take our profits. Once it gets to Monday, maybe around 6 p.m. Where is our 6 p.m.? 6 p.m. is around here. Around this area, you close your trade at 1 risk reward ratio of 1 to 41.85, and that is good. If you are risking the $100 to make 1,000, you have more than $4,800 made on this trade alone. And this happens every day. With the new daily candle formation, you will always get an opportunity to get into a high risk reward ratio. Most of them will get to 1 to 10R, 1 to 20, or even 1 to 30. The commonest is 1 to 10R. You want to first get that $1,000 or 10R, and then you can start scaling in or scaling out or whatever you want to do. And that, guys, is the simplest model you can use to flip accounts.